There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the Saturday Software Strategy Session. My name is Steve Vetterl on the microphone. Today is the 6th of November. Do me a favor, if you guys could please, can you let me know if you can see my screen and hear my sometimes annoying voice, right? Let's go to the news feed here in the AP social chat as we sort of poke through, see what's going on. Do note that Desan posted something here. If you don't subscribe to Variable, I guess you wouldn't see this, but he has a link tree set up, which is actually very helpful. I'm not sure if you guys are familiar with what Linktree is. I'm actually going to drop this link in the room right now. Let me know if you guys can click on this link. So somebody could post that that link works. It's actually the first time I've posted a link inside of one of these rooms. So I'm beginning to see a lot more of this in all kinds of different stuff. So Linktree is real helpful for a lot of trading. Heck, guys that run companies like we do, or somebody that just writes a lot. I've been seeing this linked a lot with what's called a Substack account. So if that helps you guys with journaling trades or anything like that, there you go. So outside of the community, I always like to point out when you go into any of the groups, just pick a group, right? So like Arrow shows you what's going on inside the group, right? But if you go to the live pages, I'm subscribed to everything, but if you pick a particular group, let's say you're a member of Flash or Arrow, note that the schedule's right here. And I think it's important. Again, this is a risk management thing, because if you don't know when your developer is presenting the weekly call, you're not going to get good information, right? And if you can always watch it, but the cool thing is you can drop down to the end and see our man Dom presenting in terms of a recording. So there's the schedule. I think maybe it was slow for a lot of our subscribers to adopt this, but it's good to see we're getting a lot of people on. Feel free to throw out some sort of friend request. It's kind of like just basically like the Facebook platform, so forth. So that is that. Let's go into the calendar for next week. Do note, Canadian and US, essentially North America, daylight savings time shift tonight. Now I know, and I hope everybody checks their times on their software. This could create some disruptions with any of the software that's running in an automated version or some sort of throwing alerts version out to you on the MT4 platform. So just keep that in mind. All right, Monday, and have a let's see where I put that. Had some comments that I made a note from. Let me just pull that out of OneNote here. So on Friday, and let's just take a step back and go to the previous week. Okay, Friday ending, or essentially Saturday ending, November 6th. These are the unemployment rates in the U.S. Okay, so the non-farm report that shows rising wages. Okay, and showed essentially a sticky low participation rate, which essentially is just lackluster employment. I mean, a lot of that has to do with different states ran unemployment for a long period of time, as many of you may know here in the U.S. Um, it's essentially just evidence that people are coming back to the job market, but it's been slow, which really just surprises me, quite frankly, because especially in anything that has to do with shipping, they're really paying some pretty high wages for jobs and so forth. So, what does that mean for the broader macro market? What it means essentially is that more likely inflation is going to continue higher, which nobody wants to hear, right? Nor do central bankers. We haven't really gotten any clarity on the Federal Reserve central banks move in terms of their, this is all anticipated stuff. Market just continued its grind higher in terms of equities globally, at least in developed markets. So if we look at the week going forward, Chairman Powell is speaking tomorrow. It'll be interesting to see if or what he has to say about inflation, right? So I find this to be, and you can always click on these if you want. These are virtual meetings these days, but he's going to be speaking, and I'd imagine the notes are going to be fairly canned, but there's always that chance that a potentially outgoing Federal Reserve chair may make some outside of the box comments, right? I mean, it certainly has happened before, and markets have gone a little nutty. I did note that over the last couple of weeks, if you are a variable person in terms of using their software, they had a little bit of a rough time. Seems to be climbing out of it. There's been some more volatility, obviously, strangely enough, and almost anything that has to do with CAD-related pairs, right? So, not something I was engaged in trading. I still want to note about this. So speaking Monday, Tuesday, Bank of England governor speaking. So we've got two big chairs of central banks speaking Monday, Tuesday. Do note these times are different than your times, depending on what zone you're in. I'm in the Pacific Coast. So set these accordingly, and obviously they're going to be different because of the change time tonight. So I think it's probably would behoove everybody to sort of shout it out from the mountaintops to all of your up and down line folk. Times have changed. Go in and check your MT4 software and make sure everything's all set up and operating correctly before the Forex markets start tomorrow night. That's the wisest advice I can give you on that respect. So CPI we have on Wednesday. We have the bank holiday on Friday in both Canadian and the U.S. And this is, they have a new calendar system. Yeah, so they got that right. That's pretty tagged in there. Right, fair enough. Let's move on. I did get that message. Take a look at the charts just from a daily perspective. So what you're seeing across the top is U.S. equities, okay? And the markets just continue to grind higher. A lot of people ask me all the time, including clients, why these markets just keep grinding up and up and up. Had a little bit of a correction. If you take a look at hourly charts, you can actually see where the pullback's taking place in some markets, but it doesn't help as far as understanding something really short term, like a 5-minute chart. Let's move it back to the dailies from just a macro analysis. I try to just stick to that. The answer really is if there's nothing standing in the way, the heroin injections will continue in global markets, right? And that really just has a lot to do with ease of capital that's flowing, low interest rates, high demand. Okay, so that obviously all sort of ring out in the form of corporate earnings of individual stocks, which we certainly have seen, especially in the tech arena. Anything that has to do with transportation has been lifting a lot. That really is just due again to demand and supply chain issues that have been quite pervasive over the last 6 months that we expect to continue. Albeit not necessarily related to, maybe I should have retweeted that. Actually, let me check to see if I have. This is actually a really good story, I think, that would help. Make this bigger. I'm going to log in here. For any of you that have asked this question in the past, if you're looking at my screen right now, we use LastPass for all of our browsers. LastPass is an absolute fortress of a vault that stores, in my case, almost 300 passwords for everything: business, banking, brokerage firm stuff, Schwab and all of our big institutional accounts that we deal with. It stores everything. I have full trust in these guys. I have nothing to do with LastPass, but I can tell you I've gone into client houses of some of even the richest people, and they still have their freaking passwords written down, in a black book. I'm like, what, are you kidding me? You're worth millions of bucks. You don't have a password system set up? And they're like, well, I don't like. I can't tell you how many times I've installed LastPass on the client's browser. It's crazy, including a lot of our new employees. So everything's vaultized. Is that a new word, right? And it really is just smart. This is my Twitter account. You can follow me. It's at FXES Trader. Let's take a look at what I've posted so far this week. I don't really get into a lot of new content. I just do a lot of retweets, but it is only, especially if you're new to my broadcast, I do not post silly crap or useless banter on anything. I don't post anything on Facebook. I have an Instagram account, but it's only for just our family because they won't leave me alone with all the pictures I take. But I don't believe in any social media, which I know flies stark contrast to most of our builders, and that's fine. They spend a lot of time on social media. I choose not to, but I do find Twitter, as much as I can't stand Jack Dorsey, I do find Twitter to be a hell of a resource from the standpoint of people that I follow. Okay, just about 225-ish of them. I'd say probably a third of that list is people that are exceptionally wealthy and exceptionally generous with their data use and time on Twitter, right? So as much as I can't stand this platform broadly, it has been very effective from a research standpoint. So anything you ever see me post from Sentiment Trader or Jeffrey Gunlack, Double Line Capital, retweets from Puff Dragon. This guy here is very smart. Kyle Bass, Hyman Capital Management. He's a very generous billionaire on Twitter with a lot of his posts. And, again, this is risk management, right? Because and let's face it, I'm not the top research guy. I don't have a lot of time to spend on research anymore. But these guys do. So why wouldn't I, go through Twitter to see kind of what's going on, people posting notes about the Chinese credit default swap markets, right, ripping up. This is all risk-based stuff to currencies. It's risk-based stuff to the credits and equity markets as well. So I think I guess you could say commodities. So yes, I'm an Eagles fan. But the key thing to all this stuff is that, and I thought this was great, by the way, this video of this guy catching this alligator. Since we're moving to Florida, I kept showing this to my wife. She's all freaked out about alligators. But there's some really good stuff on here, and you'll see me. So follow me if you want. I don't really care. But the point is that if I'm retweeting stuff that could potentially be a ripple, right, and turn into some sort of a tidal wave, that's risk management. So the thing that was posted from Sentiment Trader over the last week, I thought was really interesting. So, and this really applies for anybody that is trading any of the equity indexes on the MT4. I don't care what it is you're trading. We have had some pretty smart money going in and making some big hedges short. Okay. Now, as everybody knows, most global equity markets in developed nations are either damn near or at new highs and or grinding out to new highs, as we are in the U.S. But there was 600,000 contracts purchased in treasuries, right? And now there's essentially a net short position. This is a monster one right here. And a lot of the word on the street among some of my trader buddies and I is that Goldman's taken out some big positions short. Does that mean the market's going to get clobbered? I don't know, right? These guys could be wrong too. But this seems like way too smart of a bet for somebody to be wrong. This would truly fly in the face of this chart here. You can see this would truly fly in the face of conventional wisdom in decent economies with a Q4 grind up in equities, which is typically the case. So take this with a grain of salt. We could be totally wrong. All right. What else do I want to say about the calendar? So note that bank holiday, by the way. Typically on bank holidays, equity markets and or credit markets, commodities markets, so forth, could be, operating. But typically, if it's a bank holiday, there's just less volume, right? In some other, and more than likely, credit markets will be closed this day, which brings less volatility to treasuries, right? Which could carry over into less volatility. The problem with making that statement, and people are like, oh, well, be comfortable about that. The problem with less volatility and less volume is big moves can be more exaggerated. So it's almost like you got to be on just same type of high alerts, accepting or letting your system trade through a day like this where essentially parts of the markets are shut off. So going back to daily charts of everything, I just like to scan through this each Saturday. When I get my Investors Business Daily newspaper, I go and look at the markets. Obviously I spend a fair amount of time ripping through Twitter to see who's posted what over the course of the last week. Any clues that we're looking for of any sort of cracks in the ice. So the only thing that stands out in any of these charts, and I don't know, just looking at the US dollar, just a broad, make this a little bit bigger if you guys can't see this. Dollar peaked out to the highest high it's been to in a long time, and it had a big rejection. Will this be, can it be, is it the perception this is some sort of inverse or a hammer reversal, right? Remember, this isn't an island reversal, but it's a reversal. Does that mean we're going to spend some more time back trading in what has been long period of time in this base? Probably. So the opposite happened on the euro. It came down and made a lower low and then essentially was rejected from that, just like the opposite of this chart. Of note this week was the pound. Okay. So we have, and this is a different chart. I'll go into the trading view stuff, but sometimes I like to look at it here. This is a pretty solid support line. The spot 3413-ish area, right around the 3400, essentially the century mark. Pretty solid. So, this really just means to me you can continue to accept trades. Look back. Note the VIX It popped up a little bit as well. Yeah, so let's take a look at the charts. So what you're seeing here is just June 30th to now on the S&P. The start date here, essentially of June 30th. I have a market profile chart just laid out on that. I just want everybody to know it's far, far away, obviously, but down at this 4350 area in the S&P, it's the center point. It's the point of control. So all the volume that's executed on the S&P and all its related contracts over this period of time, the value area high, which will serve as a support line, 444. So essentially that 4400 area, a little bit higher. Value area low, it's 4280 area. Notice where the value area low is. It's perfectly in line with pullback in the correction in the S&P of major note. So if we were to have some sort of black swan event coming, like some are predicting with all these shorts being laid out in future contracts, this is the big hold point. So we would expect a flash reaction. That seems like a long way to travel, right? It can happen. We would have some sort of crazy reaction and whatever. This is the point where we have to hold. It's that simple. It's a long way away. Could not even materialize this week. Look at the Qs. July. We get June 30th as well. This isn't necessarily as accurate because we've spent more time in this area. So at least from a volume perspective, I think it's interesting that the value area high, we had a sort of pullback, rode that line. Yeah, we rode that line right around the 373 area, right around the 50-ish area. And then Dow, although this one's not set up right, so let's skip that. Let's go on to the DXY. Let me reset this whole scale. I like to put these things into perspective in terms of the moves that took place. There's so much time now, we can actually do weekly charts on this. I just want you guys to see the area we're talking about. We're still in that sort of reaction high is 94.70. We haven't quite got there. High 94.62. So we'll notice there's that front running thing that took place that I had been talked about last couple of weekends. You know, a lot of times the big money will flash in terms of a large area. They'll come in ahead of it. A lot of times, if you were looking to short this on some sort of reactionary move on a smaller time frame chart on Friday. So if we look back at let's just look at a 1 hour, you'd conventional wisdom would say, well, let's just let it get to the all-time high it was at. I should say not all time, but the recent high over the last 9 months was right in this 70 area, 94.70. You'd want to let it get to that area, but nope. A lot of times they'll front run this. So you'd want to be, if you're looking to short, this would be a great place to just come in and short in front of with smaller size. And then once you get into those areas, you can size up if you feel that it's beginning to turn south. It's kind of how these trades work from a swing perspective. Let's take a look at the weekly. So, and this coincides with everything I've just been saying, this long-term area, if you will, that essentially ended right on the 20th of January. We had a huge base that we broke from, and notice it's just been difficult to get back into that. And see if I can stretch this out a little bit. Follow on the dotted line here horizontally. You can see we've made in 1, 2, 3 weeks, including the last 4 weeks, including last week, we've made 4 attempts now to get over this area and haven't done it. What this will do normally in a longer term chart, I don't care if it's an equity, a commodity, typically any currency, maybe not as applicable in the currency markets, but the shorts get emboldened in this type of scenario, and usually they get blasted. So I can promise you, and this can apply to, like, if you look at the euro US dollar, we keep sort of the opposite of this playing out. This is a weekly chart still. There's a lot of stops down here. So it would make sense to just make a quick run into this area. And you can use these areas that are the opposite or essentially uncorrelated or the reverse of the DXY chart I told you about and showed you over zillions of months. But there's stops building up in this area. Will we get out and flash into this area? I would expect it. The longer this hangs on the edge of the cliff in this particular chart, or looks like it wants to absolutely rip on just the DXY, the more the shorts and the stops pile up in these areas. So it becomes eventually a self-fulfilling prophecy. We tear into that area. That's a particular trade that I want to be on because there's momentum, there's volatility. Typically, there's a bigger intraday range on those types of trades. And it's really just a break. It's, in this case, a breakdown. The case of the DXY, a breakout to the upside over a fairly long period of time. We could certainly just blast all the way up into this mid 95 area. I don't see it stopping until we get through this air pocket, which took place on the week, the 20th of July of last year in 20. This was pandemic certainly driven. But I would expect us to get to, we could run a whole dollar very easily. So just keep that in mind. I don't know that I'd be stepping in front of this train if that, in fact, it does happen. Of course, it seems like a broken record because I've been talking about this crap for 4 months now. So now this one is interesting. So this is a weekly chart, and kind of surprised by this. And I don't really, there's obviously a zillion factors driving this, and I'm wondering if this is sort of like the canary in the coal mine for us. And in all fairness to everybody, I haven't taken and spent the normal multiple hours of doing research on what's going globally in the last couple of weeks. I may have some time coming up because we have a sort of break in our craziness with this startup next week. So I may be able to provide some more insight as to what's going on here. So stay tuned on that. But just note it. What else? USD CAD, not much to say here. GBP CAD that I want to look at next. This is the NEO currency. I did want to show you guys this chart. My hope is I don't track, I don't have NEO running in anything live. I'm just sort of relying on all my soldiers, my troops to report to me what's going on. I got 10 guys I talk with that are big builders in this company that are just dialed in on this stuff, including Cam and a couple others you guys may know. Tyler. We did have a rejection off of this long-term support line. We've taken 1, 2, 3, 4. We've taken 5 stabs at since we've been in this base, the 20th. Looks like it wants to break below it. So it breaks. I'd rather be short, right? Or any kind of vicious pullback to this area. But this really does look like the line in the sand, this whole 67.20 area. So I guess it's my hope that NEO has taken some longs, which is usually okay. Your first shot into a big area, take the long, right? But I don't know once this breaks below this. Statistically, I don't care how good the software is. It's kind of hard to beat long-term stats. Anything that breaks below a particular area, you don't want to be trying to catch a falling knife. You'd rather be riding the train down, right? GBP, I thought this was of note. Again, we're still just looking at weekly charts, sort of a broad perspective over what's gone on the last 2 years, almost the last 2 full years. I'm not as concerned as much about what took place in 19 as I am just the moves going on here. But more importantly, we had a pretty big move. So let's drop it back to the daily. And you can see from the perspective of this is a good illustration. Now there's been all kinds of rumors running around that I did catch in the UK, and it probably has something to do with this. But we had a push into an area, a slight pullback. This is what I talk a lot about just waiting for the pullbacks and taking them short, and then we just had an absolute burst through this area on Thursday. Now we had a doji, which is technically an indecision candle on Friday, but I don't know that we can really read a lot into what took place here. We're going to need to see a couple more days play out, but you'll have a lot of heroes down here in any kind of chart pattern that looks like this, saying, oh, well, we've spent a lot of time in this area. We've gotten to look all the way back where I do on the weeklies and see the support level here, but we had very little interest in buying this after a big rip, right? The fact that, and these weren't dojis, but there just wasn't a lot of bounce, right? You could call this a dead cat bounce, if you will. And then it just ripped right through it. So there's just more stops to run, or it was just a matter of the auctioning process wanted to take down and find buyers. There was no buyers to be found, so it was a pretty big candle print, and then an indecision day on Friday. So with that being said, it certainly could bring volatility into any software that's trading GBP-based pair, right? Including Neo. I don't know how Neo's done recently. I haven't looked at a lot of the performance, but just keep all that stuff in mind. So the Australian-Canadian dollar relationship is mired in a balance area. The down under countries, GBP, NZD, this would keep making lowers. There's no one time framing just yet, but we're riding this Bollinger Band lower on the daily. Again, don't be a hero down here if you're trading this. Just trade the pullbacks. At some point, we're going to balance out. Looks like it needs to get a little more extension down. Not by much. This whole 1.9 area, real strong, but it could break. Gold, no surprise here. I think we're about to blast higher. Notice our continued coiling, if you will, or tightening up of this chart pattern on the daily. Pretty sure if everything plays out, there are so many shorts up here that just need a good barbecuing, probably all the way to this 1920 an ounce area. Not a big gold trader, but the futures markets for this is very active. What else do I want to address? Euro GBP. Nothing going on, still hanging out in that long base. I show this one. US CAD. Daily. One of the ones there's so much noise going on. You got to jump up to a weekly chart to get a better idea of long-term downtrend. And keep in mind this is reactionary high in relation to everybody running to the dollar during the pandemic. That subsided. This is probably a great chart, at least from the standpoint of the North American relationships between two countries. Of you had a rush to safety in this particular case, and then I think all is looking at all the ridiculous trillions of dollars in debt we've added on, and it just goes down. So let's take a quick look at my favorite area to be a hater. And that is the coinage Where in all fairness, my read on this hasn't been that great, but there's just a lot of other factors in play in this area that leads one to not be able to use conventional technical analysis. And a lot of that just has to do with marketplace mania, right? We had a lot of this take place in certainly 2000 through 03, big tech wreck, .coms and pets.com blowing up and all kinds of tech stocks getting clobbered. And we have a client, tell me this won't make you jealous. We have a client back then, it took almost 600 grand, put it in NVIDIA at the bottom of 03. So I'm not even going to tell you how big his tax problem is. It is millions deep. And it is a ridiculously concentrated position for him. And we are trying like the Dickens to peel some out because NVIDIA has run up more than almost anything else with the exception of Apple and Bitcoin over the last 15 years. So there's an example of a ridiculously risky position, especially since the 600 grand represented his entire inheritance back then. But he's a gamer and now he's retired. Anyway, it's fun, right? So looking at the coinage, 66,520 on the high, we're balancing. Much noise here. We got to look at the weekly charts. I did want to at least point out our dojiness the last 3 weeks. So we are technically in an indecisive area as far as the next move. My bet is that we go back down, but I could be totally wrong and some big dog could come out and start squawking about the coinage and it could continue to rip higher. Wouldn't doubt it. But again, past performance is no indication of the future, but it really is all we have to go on as far as analysis purposes. And just understand this just does not act like most technical analysis charts I show you. So do some currencies, right? You know, the best advice you're going to get from a technical analysis is always looking at it on any product or any instrument that has an actively traded centralized volume environment, right? So I use the S&P as an example, or certainly the ES, which is the E-mini futures, trades on the CME, you know, so all the volume is executed for the most part on the Chicago Mercantile Exchange, or it's a couple others that they own. But when you have an aggregated volume that is a trusted data source, if you will, whether it's being fed into your future systems via like a DTNIQ feed or a CQG or a Bloomberg, you've got a solid data feed, right? So something like this, in my opinion, this Bitstamp crap up here, I don't consider that to be a solid data provider. I really don't. So call me wrong, try to, you know, show me different ways, that's fine. But the risk to this from the standpoint of the data provider and the volume that gets reported, it's just not there. So this is one of the reasons I've got to believe the SEC was unwilling to approve any kind of ETF because of the fact the futures markets, which is a little more liquid, still doesn't have that sort of stable fortress of a base, okay? This is a big concern among a lot of institutions. It is a huge reason why you do not see this in conventional investment portfolios. It's changing. The demand is there. The client pounding the table, if you will, to whatever the investment firm is there, but there just isn't a stable, I don't know, a stable market. Many on Wall Street, right or wrong, still view the use of Bitcoin as for nefarious purposes. Drug dealers, you know, all that crap out on the black market. So let's hope, for the sake of all of the shills that are all over social media shilling whatever coin that does continue to gain stability for their purposes. I do think that most of this NFT and coin-based market is going to just go poof in the next correction. Let's see what else. BITO, we're not really putting any analysis on it at this point. This is the ETF. You can notice we've started to see some volume, but it's tapered off a bunch. This is the new ETF from ProShares. This is a tradable ETF, and I would imagine every brokerage firm now. For what it's worth, I have started to poke around to these Glassnode guys. I don't know. Here, I'll show everybody this. This is this page not coming over? Here we go. If these guys can provide any decent blockchain and or coinage analysis, I'll take a look at it. I don't know what kind of following these guys have. I'm always skeptical of all this stuff. It's probably more of a detractor part of my analysis than it is me being inclusive, right? Because I'm what they call ye of little faith. That's like the joke in the Federal family. We always are like, hey, ye of little faith. My dad always used to say that. Right now, I have ye of little faith. I need to be proven differently, right? Call me an old school, old fart, what have you. But I think that it can certainly be. So let's just take a look at. So take a look at there's some links if you guys want in our chat here, in a little public chat among our attendees this weekend. Our astute group of attendees. Some of you continue to listen to me drone on every weekend, so I appreciate that. What am I missing? The answer to that question is almost always something, right? But we can only scan and look at the best. Notice oil rolling over, and don't pay as much attention to that as looking at the entire energy space. See, we've had a little bit of a rollover, big drop in gas. See that? Heating oil. This one's a bit of a surprise because, obviously coming into winter in the Northeast, typically you see a lift in heating oil, which we've seen, obviously. Gas is surprising. That's daily. So if we look at the weekly charts of all this stuff, you can see that. So if this doesn't show you inflation, energy, I don't know what is, right? I heard a good argument, by the way, to why lumber you shouldn't pay any attention to from really smart guys, big credit traders. So I think I'll pay less attention to lumber. I guess for the purposes of building a house in Florida, we hope lumber goes down. All right, what else? I think that's pretty much it. You guys got any questions? Always feel free to jump in AP Live and hit us with a question. I'll post the weekend notes. I think I'm going to be changing the format of the notes after the first of the year, but we just have so many new subscribers that keep coming in, and I think this is like the like the advertising guys telling me that when Pringles comes out with a new flavor or whatever the hell is being advertised, they've got to run commercials till you're blue in the face because it takes people a long time to get stuff. So I have it continued to, just based on that, in human finance terms, I bring the same points up over and over again because it needs to be driven home. And the primary one is don't trade with money you can't afford to lose. So everybody, have a great weekend. Coming into the holiday seasons, don't pay attention. Let your heart not be troubled. Don't listen to any of those crazy commercials. All it does is create mania. So get out, take a hike, read a book, do something in the broader picture. Everybody have a great week. May the trades be with you.